Every time I look around, I always see banks having the nicest buildings out there. And yes, I know they have the nicest building because they make a lot of money, but I never truly understood how they really make money. If that's what you're trying to find out, well, let me tell you, you came to the right episode because we're gonna cover that today. Hello everyone, and welcome back to another episode. If this is your first time tuning to Novarise Invest, this is your channel for real estate education. So today we're going to talk about the banks, right? How do they really make money off of you, right? So first off, what I want to do first before sharing all the details and stuff like that is to help you understand that no two banks are the same, right? They are all different and unique in their own way, but if I have to place them in certain categories, I will have to say that they all more or less belong to three different types. And they are as follows. So they are the ones that focus on the consumer. And by consumer, I mean you and small businesses, right? So small biz. Then there is the other kind that focuses on institutions. So they provide services to big companies and big investment firms and stuff like that. And then there are others out there that are actually a hybrid. They do a little bit of both, right? So a hybrid bank. So if I were to pick a name or add a name to this, I will say that one bank that could fit this criteria will be Capital One, right? Because they're all about the customer. They're all about having branches, having personal credit cards, having checking accounts, savings accounts, you name it. Then the bank that focuses their service at the institutional level will be a bank like Goldman Sachs, right? So we got Goldman Sachs, right? The ones with the fancy suit and the C-suite, you know, overlooking the city, overlooking the nicest city and the nicest landscapes. We got the Goldman Sachs people right here. And then a hybrid of the two will be a brand like JP Morgan Chase. So we have JP Morgan Chase. So on this side, on the JP Morgan side, is where all their services are actually geared towards the institutional side. And then on the Chase side, that's where you see the branches all over the country with Chase, right? So now that we got that clear, what we're gonna do, we're gonna study these two, or we're gonna talk about these two, because once you get a gist of what these two banks do, you will eventually know what the third category does, right? So how does the consumer-oriented bank makes money off of you, right? That's very simple. This is the one where we mostly talk about. That's the type of bank that we're mostly familiar with. So it's no surprise that they make money off of you by charging you monthly fees, right? Because if you don't have a certain amount of money in your bank account, they're going to charge you a monthly fee to, you know, take care of the maintenance and stuff like that. They also charge you for late fees or overdraft fees, right? So late and then overdraft fees. They also charge you money every time you are trying to wire money. Like if you have bought a property at this point, you probably know what that means, right? So any electronic transaction that requires wiring, or sometimes even ACH if you are a small business owner, because you just simply don't want to carry that pile of cash with you to pay somebody else, right? Another way they make money is by charging loan originations, right? So loan origination. So I'm sure at this point, if you ever had a personal loan from these banks, you would have paid at some point a loan origination fee. The same thing applies for a car loan. They also charge you loan origination fees. And if you have a mortgage, they also charge you loan origination fees. They charge you money for the checks, although, you know, most of the money of the checks, they go to the printing company, but then some, they do charge you a little bit more because it's their paper. Like let's say you run out of checkbooks and you need like last minute emergency checks, you go to the teller and you ask them to, you know, print out 4 checks. 4 of those checks usually cost you $10. It's a lot of money, but hey, they need to make money somehow, right? And lastly, they make money off of you by selling your mortgages, right? If you have no idea what I'm talking about, don't worry. There's an episode down here in the description box. It's going to talk about this in more detail to help you understand what you're learning right now. So now that you know this, let's just move on to the institutional investors, right? What is it that they do that they make money? This side of the equation is probably about 1% of the entire population. Like only 1% of us know what these type of banks do. And then 99% of us know what these type of banks do. Every time we hear about a bank, we think about them, but they're also a bank too, right? So what makes them different? What is it that they do that makes them different? And this is where they generate a lot of money as well. Okay, so, all right, the first point. But before we do that, I just remember, do not forget to hit the like button right here so you can help this episode rank and help other people like you looking for information of this kind. So now they make money by being consultants, right? Any type of special investment analysis or investment services that they offer big clients. So investment analysis, right? That's why they call it investment banking. So a good example is when they work as consultants or they guide big businesses to do mergers and acquisitions. A great example of that is, let's say, the purchase of Sprint by T-Mobile, right? So they advise them on how much they should be paying for share. And then Sprint also needs to hire a bank to advise them on how much their share is actually worth so they can use that information and come to a middle ground and, work on negotiations and stuff like that. And every time they do those consultings or like investment analysis or advisory fees, they get to charge a lot of money for it, right? Another way they make money is by offering financial services. So what type of financial services? So financial services, S, right there. So let's say you have a 401k, right? You have an IRA, and every time you take that money out of your paycheck, you set it elsewhere in a brokerage house. You put it on the side, and that on the side, it's at a bank or a brokerage house. And then they take that money and they invest it because it can't grow if it's just sitting in there, right? So they manage multiple portfolios. They manage big accounts, from like big corporations with lots and lots of money where they can actually take that big chunk of money and they start investing it. That's why you see your 401k growing. Even if you're picking a random type of investment, somebody in the background is actually investing that money for you. Another way these type of banks make money is through transactional services. Right? If you've been around, you probably heard the news that at some point there was a bailout. The Federal Reserve came in and they loan money to these banks. They have to rescue them. Well, yes, they loaned the money, and that means those banks, they have to pay that money back. So when they pay that money back, somebody needs to settle that money. Somebody needs to allocate that towards a principal payment, let's say, so to speak, and then reduce it and then allocate the interest and all of that. And the Fed in itself doesn't do that, right? They need an additional services, a third party, so to speak, to handle those transactions for them and help them with the settlement. So every time they do that, they also charge money for it because they're not going to work for free. The banks are here to make money, remember. Another way they make money is by doing wealth management, right? So wealth management. What does that mean? Well, people who have a lot of money and they don't have time, or maybe they just simply don't feel like it and they want other people managing the money for them. So they come in, they take the rich people's money and they start doing research, they do analysis, and they say, you know what, I think you should invest your money here and here and here. So that way you can make more money. And then the more money you make, the better for me because I get to charge money and commissions for whatever money I'm helping you make, right? And then another way these, entities get to make money is by doing research. Yeah, it is very important because you know why? Research takes a long time. Research takes going out there, searching for information, talking to people, and they don't do just any kinds of research. They focus their research on anything that can make them money and anything that can make their client money. And that, ladies and gentlemen, is how banks make money. Once again, most people think it's only here, but it's also here as well. And there are institutions who do things silo, they dedicate themselves to like one area in specific, and there are others who are a merger of the two. So hopefully you found this episode very educational and that hopefully you learned something new today. And while I still have you here, don't forget to check this episode over here so it can help you complement everything you just learned over here. So that's pretty much it. I will see you guys soon. And until then, take care. Bye-bye.